Dear students, welcome to my YouTube channel. In the previous video, we have discussed the theoretical aspects of single entry system. In this video, I have taken a problem on preparation of a total debtors account. Kindly watch the video till the end, like it, subscribe the channel. If you have already subscribed, please ignore it, and if you have any comments, please put your comments in the comment box. Thank you. So this is a problem on preparation of total debtors account. So I have taken a problem from the question paper 2016 December. The problem runs like this: prepare total debtors account with the following information. So the details are like this here. Debtors as on 1/4/2015 amounted to rupees 1 lakh. Debtors as on 31/3/2015 amounted to rupees 75,000. Cash collected from debtors is question mark here. So that means we need to find out the cash collected from the debtors here. Then bad debts written off, which amounts to rupees 5,000. Then cash sales, so 40% of total sales, rupees 3 lakhs. Then reserve for doubtful debts, rupees 4,000. Then a return inwards, rupees 10,000. Then discount allowed, that is rupees 8,000. So this is a question which is asked for 2016 December paper here. So now let us discuss this problem here. So we have given the both opening and closing balances of the debtors here. However, we are not provided with the opening and closing balance of the bills receivable, and there is no any transaction which affects the preparation of the bills receivable or bills receivable account here. So there is no question of preparing the bills receivable account in this problem. Then we need to think of the cash sales, 40% of the total sales, rupees 3 lakhs. Here cash sales amounted to rupees 3 lakhs, but we are not given the total sales here. So we need to find out the total sales here. So then of that 40% will be the cash sales and the remaining will be the credit sales. I mean to say 60% will be the credit sale, 60% will be the credit sales here. Then reserve for doubtful debts, it will not appear in the preparation of the total debtors account because it is not an actual loss. So now let's go for the answer here. So first working note we need to prepare here. So that is we need to find out the total sales here. So calculation of total sales. So how to find out now? So for cash sales, if cash sales are rupees 40, then total sales will be 100 rupees 100. So therefore, for cash sales of rupees 3 lakhs, rupees 3 lakhs, total sales equals to rupees 3 lakhs into 100 into 100 divided by, let me take here, divided by 40 divided by 40, just excuse me here, just wait for a minute here. So 40 so here we are going to arrive at, so 3 lakh into 100 divided by 40, that comes to rupees, so now you can calculate here, so 25, sorry, 22s are 25s are, so it will be 7,50,000. So 7,50,000. Dear students, please remember this is the total sales we have got. So therefore, credit sales equals to total sales minus cash sales. So here in this problem, we know the values in the above formula. So total sales which we have computed, calculated as rupees 7,50,000 minus the cash sales are giving this problem as rupees 3 lakhs. 3 lakhs. So here we are going to arrive at rupees 4,50,000 as the credit sales here. So now we need to prepare the total debtors account. So debit here, total debtors account. So let me insert the table here. So particulars, amount in rupees, then particulars, amount in rupees. So now let us go for preparation of this. So the first item here, to balance brought down. This is opening balance which is given the problem as rupees 1 lakh. Then we have given in the problem as closing balance, that will take it later on. So we need to find out how much is the cash received from debtors here. So let us write down here, by cash, in the bracket we'll write down it as balancing figure. Why it is called as balancing figure? Because unless we get this amount here, it will not get tallied here. Then the next one, bad debts written off. So when the bad debts are written off here, then the entry will be bad debts account debit to total debtors. So total debtors is credited by bad debts. So that comes to rupees 5,000 here. Then here the cash sales are given. So we have found the credit sales here through the working note. So when there are credit sales here, then the entry will be total debtors account debit to sales account or credit sales. I will write in the bracket as credit. So here it is, we have found as rupees 4,50,000. So 4,50,000. Then the next one here we are going to reserve for doubtful debts, which will not appear here. Then the return inwards. So when it is nothing but sales returns. So when there is a return inwards here, return inwards account debit to total debtors account. So total debtors account is credited by return inwards. So amounted to rupees 10,000 here. Then next, when the discount is allowed, then the entry will be discount allowed account will be total debtors. So total debtors account is credited by discount allowed. So which is given as rupees 8,000 here. So 8,000. Then the closing balance. So by balance carried down. So which is given as rupees 75,000 here. So 75,000. So now let us take the total here. So the total on the debit side is more here, obviously. So it comes to 5,50,000. So let us write down here also 5,50,000. So from this 5,50,000 we should deduct here. So it will be 4,52,000 is the cash received from debtors. Clear? So here we must be very careful about with respect to here in the problem it is given as 40% of the total sales, but however we are not given the value of the total sales. Suppose if the value of the total sales are given, then it will be very easy. So otherwise we need to calculate like this here. Okay, thank you.